Welcome back to Alpha Recap. Joe here. Energetic day in the markets after the close, and we've got a stacked show. AI deals, security pullbacks, a fresh wave of labour organising, and some credit relief in energy. As always, if you have questions, you can reach us at stockalpha.ai. Joining me is Kate, our fixed income specialist. Hi Kate, great to have you.
Great to be here. Thanks for having me.
Let's jump right in. Big headline. Meta deepened its partnership with Mukesh Ambani's Reliance to build an AI data center in India. That news lifted Reliance shares and, more broadly, helped the cloud and AI infrastructure theme. Kate, walk us through why that mattered to the tape today.
Sure. So what really stands out here is scale and intent. Hyperscalers partnering with local champions signals big-ticket capital spending. Data centers, networking, accelerators. The market reacted. Reliance shares rose about 2% on the news, and analysts read this as a momentum trigger for data center vendors and chip suppliers like NVIDIA.
That momentum idea really connects a lot of dots. I mean, when you step back and look at this, hyperscalers want local capacity for latency and sovereignty reasons, and that creates demand for racks, uninterruptible power supplies, and all the plumbing. There was a market research note today about the UPS market growing from about $5.5 billion in 2023 to about $9.2 billion by 2030. Big numbers.
Right. And the other thing is the supply chain read-through. Even if software adoption lags, hardware orders and construction schedules are multi-year. That backlog tends to show up in supplier revenue and backlog figures down the line.
But, and there's a big but, Microsoft limited internal use of Anthropic's latest model, Claude Fable 5, after data retention concerns were reported. Analysts framed that as a cautionary flag for enterprise LLM adoption. How should listeners think about that tension between CapEx and procurement friction?
This is a classic push and pull. On the one hand, you've got CapEx, building the factories, the data halls, the power systems. On the other hand, enterprise buyers are tightening controls around data retention and model safety. So, honestly, I was a bit surprised by this one. It's not that adoption won't happen, but procurement cycles could stretch. Analysts noted Microsoft's move could slow third-party model rollouts and lead to tighter contract terms. Right.
Switching gears. Amazon saw a second group of Tom Team CDL drivers at one facility unionize with the Teamsters. That felt significant. Logistics labor pressure has been bubbling for a while.
Yeah, that tracks. Labor wins like this matter because they layer onto CapEx-driven cost pressures. If wages or benefits rise across fulfillment and delivery networks, unit economics for logistics-heavy businesses change. Analysts are watching for bargaining developments and whether this spreads to other hubs.
Short reaction. Not good for margins.
Exactly.
Let's talk energy and credit briefly. Enbridge, or more precisely the Enbridge Pipelines unit, reported successful noteholder approval for a proposed debt exchange. Reported vote tallies showed roughly 76% in favour, about 33% in another class, and less than 1% in a small slice. Kate, what did that do for refinancing risk?
It materially reduced execution risk. Analysts said the vote progress gave more clarity on the refinancing path, which helps balance sheet sensitivity work. The market tends to like fewer unknowns in credit-heavy names. Disclosure of final exchange documents and effective dates will be the next catalysts.
I'm curious. How did fixed income folks react across the broader midstream space today?
There was a modest lift in sentiment around Permian-exposed midstream firms. One name got an upgrade on the view that Permian volumes remain strong. So, across credit and equities, the story is that operational growth can underpin better coverage ratios if distributions and documentation follow through.
Moving back to tech. IBM and Bell Integration unveiled an AI-powered managed services platform at a summit in London. Product packaging like that suggests vendors are pushing for recurring revenue from AI. How do you see that fitting into the bigger picture?
Managed services let vendors monetize implementation and ongoing operations instead of one-off projects. Analysts have been talking about vendor mix shifts, software, services, and recurring contracts as a more defensible revenue stream, especially when procurement is cautious about plugging raw models into enterprise stacks.
And a few analyst moves came through today. Illumina got bumped to overweight at one bank, citing brighter clinical demand, and there were upgrades in cybersecurity names too. What's the common thread?
Analysts are refocusing on durable, mission-critical spending. Genomics for healthcare workflows, cybersecurity for risk management, and platform bets for manufacturing and retail. When momentum shows in one theme, it can lift nearby software and services, but execution still matters.
Quick note on industrial demos. Fanuc and a partner showed collaborative robots with AI vision at a trade show. Public demos like this can accelerate pilots, but press releases didn't include pricing or order metrics. Short reaction? Lots of interest, little hard data.
Yep, pilots are great for headlines. Convert pilots to paying customers. That's the real test.
A couple of corporate M&A bits. A home services franchisor bought a coatings business to expand cross-sell, and an energy solutions company bought a fast charging network developed under a utility pilot in South Carolina. These roll-ups are happening, but near-term financial impacts were undisclosed. What should listeners watch for?
Look for integration metrics, purchase price, charger counts, unit economics, and regulatory approvals. Those details tell you whether the deal is accretive operationally or mainly strategic.
Legal and niche updates. A sports data company got a notice related to a securities fraud class action, and an auction house is selling celebrity estate items later this month. Small items, but reminders that legal risk and alternative assets can create volatility in specific names.
Yep. Legal events often create idiosyncratic volatility that analysts try to quantify into valuation models.
We also had some technical and flow action. Tesla was flagged in a bearish technical posture, trading below moving averages on the Ichimoku cloud, suggesting downside momentum risk for technical traders. And in the ETF space, a Bitcoin futures ETF slipped about 2% on heavy volume, while the leveraged semiconductor inverse ETF jumped about 4% amid extreme activity. Two other leveraged short ETFs showed heavy volume as well. That suggested short-term hedging and trading intensity.
That kind of activity often signals heightened tactical positioning rather than long-term reallocations. But when leveraged products show extreme volume, it can amplify moves in the underlying seeding areas. Right.
All right, 3 quick things to watch after today. First, official follow-ups from Microsoft and Anthropic about Claude Fable 5 usage restrictions. Second, more details on the Meta and Reliance data center plans, capacity, timelines, and any vendor announcements like NVIDIA or local partners. Third, final documentation and effective date notices from Enbridge on the exchange. Short reaction? Those 3 could move sentiment materially.
And I'd add a fourth. Labor developments at Amazon's TOM operations. Bargaining outcomes or wider organizing signals could have second-order effects on cost assumptions for logistics-heavy platforms.
Good call. Before we wrap, give us the short takeaways. Plain language, Kate.
Okay. 1. Hyperscaler-led infrastructure deals, like Meta with Reliance, pointed to sustained capex for data centers and suppliers, multi-year demand for power, cooling, and accelerators. 2. Enterprise safety and procurement are real constraints. Microsoft's move on Claude suggested some third-party model rollouts may be delayed. 3. Labor is back on the radar. Union wins in logistics create margin risk for delivery and fulfillment networks. 4. In energy, successful vote tallies reduced refinancing execution risk, but watch the final documents. And 5. Analysts were favoring cybersecurity and genomics for durable demand, while technical setups showed bifurcation in some high-profile names.
Perfect. Quick reactions. 3 short lines. Ready? Go. Market felt active today.
Lots of moving parts.
Stay curious. Stay cautious.
Absolutely.
That's our recap. Bottom line. Analysts note the tape was dominated by big infrastructure commitments on one side and adoption and labour frictions on the other, forces that push and pull at valuations. This episode was informational only, not investment advice, and we didn't recommend buying or selling anything. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. See you next time on Alpha Recap.